Okay, I'm going to go ahead and get started. So the idea for this presentation came from last weekend when we had the Orange County trading workshop. I didn't attend that, but I did do some presentations from here. But in attendance was there was Jeff Scott was there, and some of the familiar faces, let's say, in the audience. But mainly Jeff Scott was organizing all of the presenters, and we heard a bit from Dave McMullen too. So all in all, it was a fun time. But I showed a few things in the program, and then when I was listening to some of the other presentations, I realized that there is a few templates in EdgeRater that you might not be familiar with. And it's been a while maybe since I've shown them. So I thought this would be a good opportunity to do a bit of a follow-up and invite everybody that I know to come along and just get familiar with some EdgeRater templates. You probably will have seen some that I'm going to talk about, but there will be some that might be new to you. Before getting started with that, I just wanted to do okay. This is a disclaimer. Educational purposes only, not investment advice. And the most important one, you're solely responsible for your own trading decisions and actions. So I thought I'd kick off with the state of the market, because last weekend when we were at the webinar, the market was the lowest that it had been for in 2022. It had reached the lowest point. We were in a bear market in most of the market indexes. But as of Friday, this is the state of some of the major ETFs. So SPY is now down 18% from its high. On last Friday, it was down 24%. The Qs were down 34%, and they're now only down 28%. And the diamonds are only down 14%. So if the bear market trigger is 20%, then we're no longer in a bear market. I would guess that means in SPY, but that number does seem fairly arbitrary. And also the Qs are still down pretty heavily. So this is something I looked at this morning, just drawing lines from where we were at the end of last week, going back in time. So this is kind of like your rollback, price rollback. Some of the supermarket chains have a special price rollback feature. Well, if you roll back from where we were last week, taking this bottom line, then you end up in the week ending 11/13/2020. And at that point, we were still quite a ways above, or some way above, not a long way above, but above the pre-COVID high. So as of last Friday, that's where we were. So still pretty good, really, seeing as the pre-COVID high was an all-time high. And then it took 13 weeks to make 280 points in the SPX. So the week ending 2/12/21 is the level here, which is actually where we are as of last Friday. So in 1 week, we've made 280 points. And back in 2020, at the end of 2020, took 13 weeks to make that same move. And that was in a good market. So 2021 was a really good market, as you can see. But we're now back to February of 21. So really, it seems like that, this, if there's an opportunity, if this is a bear market and everything's in disarray and the market's going to head a lot lower, then we have just been offered a really great time to sell some shares or go short. If you believe that doom and gloom is here, then this is a great opportunity to position on the short side, I think. Last weekend, we talked about where we were in this bar, and the majority of the presenters, I think 100% of the presenters, thought that there was more down to come, but also 100% of the presenters thought there would be a bounce in the following week, i.e. last week. So that played out. Whether or not there'll be more to the downside is to be seen. So this is a chart I showed, and I've updated it for the latest. This is a daily chart of SPY, and I've updated it as of Friday. And as you can see in the COVID sell-off, there was panic. So you're looking at the implied volatility in the very lowest area, and implied volatility reached 80% at the low here. So there was capitulation, there was panic, and it took that before the market could recover. In the recent sell-off, even though we did enter bear market territory last week, or the week before last, I should say, the implied volatility really did not get anywhere near those levels. And if you look at the implied volatility line, you can see that during the the 21 run-up, average implied volatility was around about 20%, just under 20%. It came down in July, and now it's at 26%. So still, people are not buying puts, and they're not paying the premium to push the price of the puts up. So people are not fearful, which could be a bit of a warning sign. So I would watch this implied volatility carefully to find out if we really, if there is capitulation, and could you potentially say that we're at the bottom of the sell-off. It seems some targets that are quite likely are this line here, the pre-COVID high. It seems a fairly likely target. Also, the COVID low is a potential target, and it's possible that we could even come lower than that. That's the bear side of it, but there's always the chance that you could be seeing a strong rally here. We already had a strong rally over the last week. How far that goes, obviously nobody knows, but yeah, I think we are, if you look at the averages, we are in a bear market, in a down trend, let's say. Okay, so always run the US market summary report. This is a report that requires HDSI. If you have HDSI software on your desktop, then you can run this report in EdgeRater, and it basically goes through the major indexes, and there are 9 of them in here, and it color codes them according to their %B one-day change. And then in this section over here, it actually gives you the %B number. And those numbers are interesting because the %B number, for example, is a single number where you can immediately tell where a stock is in relation to the Bollinger Band. So it gives you a good clue as to the state of a stock or an index in this case. And what you normally see in bear markets on down times is you see red in the %B numbers. Would make sense, right? Because the indexes are towards the end of their towards the bottom end of their Bollinger Bands. And then what you look for, and happens fairly frequently before you see a true rally, is you'll see a complete blue line in the %B one-day change, like you did here on 6.2. Didn't occur in every single index, but it occurred in all but 2. And then you started to see some green coming in the %B levels. And this turned out to be a fakie. The bar that was the %B one-day change is the one that my cursor is on over here, which I hope you can see. And then after that bar, you had a period of a range, say a trading range, but the %B numbers did go green. But then these 2 bars here, the down kahunas, appeared, and we're now back into this sea of red. And even after last week's rally, which was basically a rally for every single day of the week, even after that we still didn't see a kahuna, and we have only just started seeing some yellows come into the %B numbers. So I think that's an indication that the market isn't ready to have a strong rally from here. Also, if you look at the %B buckets, so this is the S&P 1500, and it is a breadth indicator of how many stocks are above and below the mid Bollinger Band in the S&P 1500. And then there's a histogram over here, which puts the stocks into various buckets. So the very left-hand bucket are basically stocks that are below the lower Bollinger Band. So we had in this, at the end of the week before last, when we did the workshop, we had basically a 98% of stocks were below their mid band in the S&P 1500. You had a high percentage below their lower Bollinger Band. And then you stayed in that theme for 3 days. And after this rally, we're currently in a 63% below their mid band, 35%, 65 and 35% are above their mid band. And this is the profile of the %B. So even though it's a strong rally, it still doesn't look good. There's more to go before we can be convinced that this is really a rally that's going to continue for a long time. Okay, so then I went ahead and looked at the warehouse report. So these are just a couple of slides that talk about some of the, I won't go into the details here, but they talk about some of the factors that I looked at. So by running the warehouse report from the Friday before yesterday, so 1 week, this is the rally, and this shows which stocks, which categories of stock did well. So low ERG stocks did the best. And as you went up the ERG, and ERG is the earnings, relative strength, and group rank combined. And as you went up through to get to higher values, the percent gain was lower for those stocks, and even negative in the anything above 260 ERG. And that's not normal. What you normally see or like to see is that strong stocks that have strong earnings, strong relative strength, and strong group strength perform better than other stocks. But that was completely the opposite. And then if you take a look, this is ERG, those three components together. The boxes below are those broken down into the separate EPS, RS, and group. And then AD letter rank and the HDS boxes. And the boxes were all to do with the earnings growth. So yeah, it's not a normal profile of gains. Okay. So, and then quickly, let's just see, I didn't want to spend too much time on this, but I'll run through the other slides I have in this sort of market performance. This is year-to-date performance of major industry groups, and oil, gas, and coal is the only industry group year-to-date that is up, and it's up 17%. The worst performing groups are now here, and so the actual worst performing group is media for the year. Then this week, or it's last week really, the best performing group last week was software and automotive, and then biotech and pharma. And then the worst performing group, major group last week was forest and paper products, followed by oil, gas, and coal. And remember, oil, gas, and coal is the best performing group year to date. So it didn't do well last week. And another way to look at that is in the good, bad, ugly template report. And that shows multiple timeframes. So sometimes it's a bit easier to see on here, but this is sorted by year-to-date performance, and that is 17% in oil, gas, and coal. But you can see month to day, it's down, week to day, it's down, but day, which was Friday, oil, gas, and coal was up. And then I showed this at the workshop, and this was the correlation matrix for all of the major industry groups on Friday the 17th. And the correlation was basically everything was correlated. So it's another sign that the market was due to turn, because there was no place to hide. Everything was moving in tandem, and that's not normal. This week, it looks a little bit different. So this is 10-day correlations in those same groups this week. You see that the correlations are not one for everything. So things are a little more normal there. Okay, so that's my quick review of the state of the market. And now I wanted to get on to look at some of these templates. If anyone has, let me just see if I can see the chat over here. And I hope we're all still on. 1 second. Okay, great. Yep, volume's been light other than Russell rebalancing at the close yesterday. Garner, how do you know it's a fakie unless you're looking back? Exactly, you don't. You don't know it's fake. There's no way to tell that was a fakie. That would be a normal signal that you might think, okay, everything is all clear, but it turned away from what we would potentially expect. That was the point there. Do you need to subscribe to HDSI to get those templates to work? Some of them are templates that require HDSI. And I'll quickly, if I just bring that back, let me just show, not the correlation matrix. The only templates, let's say you need HDSI for would be this US market summary and the you don't really need it for the %B buckets because you can run that on any group or any list that you have, but we tend to run it on the HDSI list of S&P 1500 stocks. And then you definitely do need to have HDSI to produce reports like this, because this data here, the EPS rank, the relative strength rank, and the group rank, the AD letter rank, and the HDS boxes are all specific to HDSI. So you definitely need HDSI for that. Other things, though, you're looking at, yeah, that's a good point. I'm looking at major industry groups here, and you do require HDSI in order to tell you what the group components are. And then EdgeRater calculates the indexes based on the components. So that's, so yeah, when looking at the state of the market here, a lot of the information requires to have HDSI. Okay. All right, so one template that I'm not sure, and I did mention it early on when it was first introduced, but I'm not sure that many people are using this on a daily basis, but the options performance between dates. So if you go to options analysis and look for options performance between dates, you will run this template. You can just run it. All you have to do, I don't even bother typing in any of the symbol information or the from and the to date, because all I really want to get is the report here, which once the report is showing, you can then do some really nice things with showing option pricing and how option prices have changed. So I want to do that to look at last week and see what options did for certain stocks. So one of the things that is interesting to do, and I would say this is a classic template that is run, well, I tend to run this every day because it really does show the, what's been happening for the day, the week, month, year, and then all the way back in history. So I can immediately see that Zendesk was, 22%, 28% gain. Bausch Health was 20%, etc. Look at Royal Caribbean. These are one-day changes. You can see the bar on Friday was quite big. If we look at week to date, sort by week to date, then you can see that Revlon was up 113%. So out of interest, you can find out what the options did in those cases. So you have your options performance between dates report up, and you can just draw a line on the chart from one point to another, say here to here, wait for a couple of seconds, and it will go out and grab the starting price of all of the options and the ending price for all of the options and produce a table. Now, it turns out in Revlon, there are not that many expirations and very thinly traded options here, but it did give some information that, for instance, the 0.1 call delta option with 29 days to expiration gained 2,000%. So Revlon gained 308% from the dates that I've drawn. So that would be from Thursday the 16th up till Friday. And it says here that's the underlying gain. And then the option gain, the highest option gain that you could have achieved there was a 2,000% or 20 times the initial premium you paid for the option. That's what it would have been worth just after that period of time, 616 to 624. But it's useful to be able to do that over any period of time, over any stock, just by looking at the chart and drawing the line. So let's go take a look at some of the others. Go back to the good, bad, ugly templates. See if there's anything else of interest. So you could look at something that maybe didn't have quite as high a gain. So here we have, I've never heard of this stock. Let's try and find something that I might have heard of. Good luck with that. So yeah, MongoDB, that's an interesting stock. I've used MongoDB. It is a great product. And let's just see. So this is the last week's gain in MongoDB. How did the options do? So all I have to do is take my line here, my line tool, draw a line from that bar to that bar, go back over to my PBD template, and we can see MongoDB, the underlying gain was 21%, and the options, and you can see this is more, this has more expirations. Let me just drag that down. So it fills in the table below here with your days to expiration and all of the percent gains and losses, and then draws that information on the chart here. So you can see that the 7-day to expiration option at the lowest delta, the furthest out of the money that was tracked here, which is a 0.1 delta, gained 1,500% or 15 times its initial price. So interesting to see those kinds of things. You can, if I make sure that annotations is turned on, it's always going to put the entry and the exit date onto the chart, so you can see what you're reporting on. You can also do things like draw a line from highs to lows, not just lows to highs. What do you think would happen here? What happened is that the stock lost almost 50% in value over those bars, and the 0.1 delta puts gained 800% in value. So it's a really interesting tool to explore option pricing. Otherwise, you normally guess about option prices and wonder whether it would have been a good idea to have been in a call or a put. But it's also enlightening because you can do things like draw a line between two peaks. So in this case, if you took the peak over here, you can draw a line from anywhere to anywhere, but I'm just giving you an example. In that case, would it have been better to be to be long a call or be long a put? And the answer is no. Calls and puts lost value there. So this would be this would have been great for selling premium for sure, and pretty much all of the short-term options. So let's say 99 days to expiration. That's the shortest one that's tracked here, because the days to expiration always has to span the start and end date. But they lost significant, 83% in the calls, 70% in the puts. So yeah, if you would have had a some kind of credit spread here, you'd have done okay. If you'd had an iron condor here, you'd have done okay. Okay, but it's interesting to research those kinds of things. So that was one thing that I did mention that last weekend. But what I didn't talk about was there's a template that's been in the system for quite some time. One of the initial templates to be released, and it's a term used by Ian and Ron, and free parking. Okay, free parking is where a stock comes back to its moving average and might hang out at the moving average, pause before maybe resuming the direction, or maybe slicing through the moving average and going below. But moving averages, you often see stocks pausing at those places. So there's a free parking template. So I wanted to cover that. It's quite. I personally hadn't used it for a long time, and then as Jeffrey was talking about free parking last weekend, I thought I would just check it out. But yeah, it's still really good. So go into the hot topics category and look for free parking, and you can do in here. You can choose the moving average that you're wanting to look at, and then you can choose also the distance to the moving average that you are looking, that you want to be alerted to. So if you got to 2%, within 2% of the moving average, then this template would put that information in the report that it's within 2%. So it's a quick way of sorting those stocks. So I'll just run this. Well, I had already run it, so I'll just show the report. And what I'll do for now with the others is I'll just move them up here to create more space. Okay, and then I'll just bring back free parking. Here we are. Okay, so free parking. And out of the stocks, the 593 stocks that I ran free parking on, there were only 3 that are in free parking. So it gives you a little bit more information than just, is it within 2% of a moving average? It also talks about the moving average trend, whether that's up or down. The ADX trend, whether it's trending up or down, strong trend or no trend. And then the RSI, whether that's holding or strong or overbought or oversold. So all that information. So here's Mattel. It is within 2% of the moving average, but it's not really what you would look for in free parking. You normally, in bull markets, are looking for upward sloping moving averages. So something with a MA trend. This does have an MA trend up, but it's quite weak. And the ADX trend, there's no trend. But let's take a look at SQQQ. That's the short Qs. That is come to the 50-period moving average. So it's right on the 50-period moving average. Definitely a free parking, something to put on your watch list if you are looking to see if they're going to hold. And then USO. So that's the oil, United States oil, which did come down through the 50-period moving average and is now bouncing back up. Does that become a ceiling, a resistance level, or is it ready to move higher again? But anyway, these are interesting stocks to put on the list. If you ever find a stock that, and I didn't mention this last weekend either, if you ever find a stock that you like the look of and you want to continue to monitor it, then you can just click on Add to Favorites. And I just clicked on that, but what that did behind the scenes was add that stock with this chart and this template into a favorites watch list. I can open that, and you can see that it's added free parking. I could write a comment. For instance, I could say, looks like a buy. I don't really think that, but you could say that. And then when you come back to review your favorites watch list, then the chart will display whatever comment you put on here. And then the report also tells you where you found this stock. So you found it in free parking. And you can see I've got above here, I've got a bunch of stocks that I've made made that I've added to the favorites watch list at points previously. So it's always interesting to go back and look at some of those. So you can look at Workhorse down here. I said that this was found with the linear regression template. I can see that because over here it says linear regression template. And the comment I made with this was it's oversold on the 12-month linear regression template. And of course, that points to the dates that observation was made. And then you can see what's happened since then in those stocks. So you can go back through the entire list here. I find that to be very useful because you may review hundreds of stocks every day. So it's always good to, if you see something that really sticks out, to add it to your list. Okay, we've got oversold on the 12-month linear regression channel. Made that note right here. Turned out to be an interesting note to make. Maybe there was a trade that could have been made here, using some kind of risk-reward methodology for entering stocks. But anyway, it's always good to go back and look at these things and see. Oftentimes, you'll see you make an observation, and then the complete opposite happens to what you expected. But I think that's also educational. What did I say here? Big move today. Well, that was a big move. Did that mean anything, really? Well, it didn't really seem to have any effect on the long side there. Lots of volatility. And then if we just scroll the chart through, we'll see where that was made over here. So yeah, eventually it went up, but then everything went up. Okay. Yeah, so that's a nice template. Another, I did mention the Mark Minovini template. Mark Minovini, and I have been doing a little research on Mark Minovini. This is one of George Lee's favorites, gurus. And in his book, he has a few rules about when he will be trading a stock. So these are like his non-negotiable criteria. And these are stocks that are in, I think he calls it stage 2, which is your accumulation phase. And he's got this idea of 4 phases: the decline, the lack of interest, the accumulation, and topping. So these are all trying to pick out that important second stage of accumulation. And once something meets this criteria, it's then good to trade. And then you can choose or try and find good entry points. And he does have this idea of volatility contraction patterns to look for entry points. But anyway, this template just runs these criteria to see what are potentially good to trade. So in the report here, so if it doesn't have an all true here, Mark Minovini is not trading this. And why would you listen to Mark Minovini? Well, he has written a few books, but he puts his money where his mouth is too. So he did win the US Investing Championships in 2021, again after winning it in like 95 and not entering for years after that. And then he went in again in 21 and won that competition in the real money category, 1 million plus invested. So, and I think he has something like a 300% return that year. So all true. So there's a few here that meet the criteria. There's some bear ETFs. Another, what's this? Short treasury ETF. There's this stock right here. And, if you look at this on the chart, you can see this is not looking the same as a lot of the stocks that are off their peaks by 30, 40, 50%. And I was surprised here to find that actually there are some stocks here that are making new 52-week highs. I think last week when we looked to try and find stocks that are making new highs, we couldn't find any, but there are some here. So Vertex Pharmaceuticals meets all the criteria. And if we look over to the right-hand side, you can see that it's 0% below the 52-week highs, meaning it's making 52-week highs. Okay, Eli Lilly also making 52-week highs. So the stocks that are in the yes category here are stocks that Mark Minovini would consider trading and waiting for the right entries on those. So it doesn't hurt to follow people who are successful in their trades. So yeah, that's a good template to put on your list of templates to run on a regular basis. Then after thinking about the Mark Minovini template, oh, and there's a message here from Paul. Yeah, Paul Duncan's. I don't know if everyone can read the chat, but yeah, he attended the Master Trader workshop, and he's happy to answer questions if you have them on Mark Minovini. Very nice, thank you, Paul. So then after looking at this, it reminded me of another template that's been in the program for a while, which is the new highs over multiple periods. So if we look at the template, this is in the hot topics category. New highs, there's also a new lows multiple templates, new lows multiple periods template, and there's a new highs multiple periods template. That's the one I wanted to look at now. And I just run this on, I did just run this on the list of stocks with weekly options. It's the reason I do that is I like to look at stocks that have weekly options. Number one, they're very liquid stocks. Number two, and they have weekly options. Number three, but of course you can run this on the list of all USA stocks. It takes a little bit longer to run, not much, but if you're interested in trading things that don't have options, then that would be a good thing. But I like to run it on the CBOE weeklies. I like to run most of my templates on that list, actually. So the report then, let's just find where that came. New highs, multiple periods. Okay. So this is a report that it has various columns indicating the various periods. So you've got a 5-day, 10-day, 15-day, 20-day, etc. 252 days, that's trading days, and 252 trading days is a year, thereabouts. And then there's the 504, which is 2 years. So if there's a yes in all of these columns, then it's making new 2-year highs. So BMY is making new 2-year highs right now. Eli Lilly is making new 1-year highs, not 2-year highs. So if we look back in the chart, we'll probably find that it was higher than that, for sure. Okay. And when I look at a longer time period like that, shrink it down, I like to use OHLC bars. So yeah, but yeah, you can immediately see it's a new 1-year high, not a new 2-year high. Then this is, okay, this is another stock which the first one I showed you was not Eli Lilly. This is Eli Lilly. The first stock has the same, a similar symbol, but it's a completely different thing. All right, so Eli Lilly is here, LLY, and that is making new 2-year highs. And then Vertex Pharmaceuticals is just making new 1-year highs, and you can see that it just broke above this peak over here. Okay, so then this is quite a flexible template because it's, okay, first of all, it shows the long period highs and lows, but if there's a yes in any column, then you're guaranteed to have a yes in all of the prior columns as well. i.e., if it's making a new 1-year high, then it's definitely making a new 2-week high or a new 1-week high. So by sorting these, you can say you're just looking for things that are making new 50-day highs, because potentially they're going to go on to make new 100-day highs and 200-day highs. So you can then sort just by new 50-day highs. Okay. And ignore the ones that have 100-day highs. So you could then sort of just filter that and say blanks in that column. So then this is just a list of stocks, a fairly small list that are making new 50-day highs. And you can quickly just cycle through these. Obviously, this is a stock coming off some fairly severe lows. But if it's going to turn around and continue rallying here, then it's going to continue along the path here of making new longer-term highs. So interesting way to look at stocks, and something I hadn't looked at for some time, but it actually is quite powerful. You also have this is Zoom. You also have the reverse of that, which is making new lows over multiple periods. So even though there weren't that many making new 1 year and 2 year highs, if you ran the new lows, you would probably find, and let's just do that for fun, you would probably find that there's quite a few of those. So let's have a look. We'll sort by 2 year highs, 2 year lows, and maybe 1 year lows. That's interesting because I would have thought that we would see, yeah, there's something a bit weird about that. Let's ignore that for now. Let's look down at this column down here. Yeah, not quite sure why it's saying new 2 year lows here, but not new 1 year lows. Anyway, something for me to investigate. Anyway, you get the idea for that. Okay, great, a great little template. By the way, I'm going to take just a second here because I have a request for anybody who's watching. And that is, this has been bugging me now for about 2 weeks. On my YouTube channel, EdgeRater, YouTube/EdgeRater, I have 997 subscribers. So close to the 1,000 subscribers. That is so important on YouTube. So if anybody listening to this is not currently a subscriber to the YouTube channel, if you could head over there while we're online even, and subscribe to the YouTube channel and just get this to 1,000 subscribers, that would make my day. Thank you. All right, that's a little, a little aside there. All right, another thing that's very powerful and simple in the way that it's presented is the seasonality templates. Here is seasonality now run on 6/17. So this was last Friday when the market was in bad shape and everything was down. So not yesterday, the Friday before. Okay, what you could have done then is look for stocks that over the upcoming next month have a lot of up years or a lot of down years or a high average % return, like down here, TQQQ. Now, because I ran this as of 6/17, the arrow that's going to be put, or the annotation that's going to be put onto the chart is going to be an annotation for that date, 6/17, right here. So then you can see what happened last week. Now, admittedly, last week was an up week for most stocks, but it's an interesting way to see whether the seasonality played out for those for your complete list of stocks. So, Google here had good 1 month seasonality as of a week ago, and then last week it had a good rally. But you might say by looking at seasonality that it was due to do well for the next month. If you believe in seasonality, you could, definitely you could say that, and it gives you some confidence that things might be moving in the right direction. It's always tricky to try and trade something when it's when it's down. You don't know how far down it's going to go, but this gives you some confidence. Of course, you still have to have good risk reward parameters, but it gives you some confidence that things might move. If they do move, they might move quickly. So Google turned out to be good, and Visa turned out to be good. And so this is a really great template to run, maybe just as a confirmation of something you're about to trade. Maybe something came up on the Minovini template that seemed interesting. And then you can, of course, confirm whether it has seasonal bias. If you believe in seasonal bias, then this is a good way to check it out. Now, having run that a week ago, I decided to run that on today's or Friday's data, just to see over the next month what normally is good. And that was on industry groups. I ran that, but I did also run it on the list of CBOE stocks. So let's find that seasonality now. That one. I could, of course, just go back and run it again. Let's try this one. Okay, I'll just go back and run that again. So seasonality, you'll find all the seasonal templates in your seasonal analysis category. And the now one is what people normally run because it's taking it from today's date and looking forward. So I'll look at that on the CBOE weeklies. Thanks for trying, Ross. I'm going to check it out in a minute, see if I've made the 1,000 subscribers on YouTube. Okay, so here is on the CBOE weeklies as of 6/24/22. So over the next 1 month period, what I like to do here is filter this so that I'm only looking at stocks that over the last 10 years have had either 10 years, 9 years, or 8 years, or 7 up years over that period. And then having filtered that, I can then sort the average over that period. So you've got overstock. Okay, so overstock is here, had a good week last week. It's at highs at the moment, or at recent highs at the moment, but it has great seasonality coming up. So it could be something to, I would add this to a list of favorites. I just said add to favorites. Let's open those favorites and then just say good seasonality. And then I can always go back to that at any time in the future and see what really happened in that case. What else have we got on here? Good seasonality is in OPK. Here's one that has great seasonality, KKR. And that has 10 years, over the last 10 years, 10 of those years have been up years for the next month with an average of 10% up. So KKR is great seasonality over the last 10 years. So seasonality is something you pay attention to. This is a really good template to check that out. Now, was there anything else? I didn't want to go on too long with this. There's one thing that I don't think many people look at, and that is well, obviously we have, this was my lead into it really. We have the %B buckets report. Most HDSI people know this and have seen this. I don't run the HDSI category one. There is a newer one which I've put into Pro Tools category, and it's called %B migration. It does the same thing. It gives you a little bit more information. So I like to run that on the list on the S&P 1500 list. Yes, the S&P 1500 list. So we'll run that and see where we are today. I already showed you in the PowerPoint presentation where we were today, but I'll show you some of the differences with this report as opposed to the regular %B bucket report. Looks the same, has more information. So it has these dotted bars, which are yesterday's values, and it also has outflows and inflows. So you can the idea was that you could get information about which buckets stocks are coming from. So if you see that bucket number 0, which is stocks below the lower band, is increasing in value, this attempts to show you if they came from bucket number 1, just the next bucket up, or if they came from the much higher buckets. That was the point of the outflows and inflows. At the end of the day, really all I look at is this chart, this graph, but it's nice to have the yesterday's values on there too. So as you can see, on Friday, we were at the 65.35 level in %B. So I mentioned this report first because there's another report in here, which is buckets per symbol, %B buckets per symbol. You'll find that in the hot topics category. And if you look in there, hot topics, %B buckets per symbol, just give that a quick run. So rather than grouping everything into a histogram, this takes every symbol and then shows the %B level for today, which is the 0, for yesterday, which is the 1, day before that is the 2, and so on. A higher number is higher bucket. So an 11 actually is above the upper Bollinger Band. So all of these stocks here are above the upper Bollinger Band. All right, you can see how long it's been above the upper Bollinger Band. Then there's the bucket move, which is interesting. If you're looking for something that's moved, 2 or 3 buckets, you can sort by this column instead. So here you can see the RGP moved from a 6, bucket number 6, which was on Thursday, down here, 1840, to bucket 11 above the upper Bollinger Band, now 2061. So there's a decent bucket move there in RGP. So everything that's had big bucket moves, you can just sort by those. And that's on the daily chart. It's also good, then does it on weeklies. So you can find out, looking at weekly Bollinger Bands, which has the biggest bucket move there. So here you went from a 0 1 week ago. This chart is a daily chart. So a 0 1 week ago was this level down here. And now we're above. So we went from below the lower Bollinger Band to above the upper Bollinger Band in Del Monte produce. So this is a really interesting report as well. As you know, if you use multiple reports, they are all linked together. So if you drag them to different areas of the screen, you can then look for things like, for instance, something that has good seasonality, like, let's see, KR. Okay. Oh, yeah. If you've got filters turned on your reports, these might not actually be linked because it won't be able to bring into view the stocks if they're filtered out. So that does end up being a bit of an issue. But if you don't have filters, the report should be linked together. So let's take a look at, I just want to show this. I'm persistent with this. Okay, so as I scroll through one report here, you can see the report below, new highs multiple periods, is updating to show the current stock. So I'm looking at Google here, and then I can see Google is in this report down here. But that works for any stocks, any report. So if you've got one report that you want to see in conjunction with another, you can just run both reports and they'll be linked together. But you can also, don't forget, do the special thing. And the special thing is to actually copy a column from one report to another report. And so, for instance, I like seasonality. Let's say I'm going to, if I display headings, that just it shows the kind of the spreadsheet headings, A, B, C, D, etc. So I might take columns G, H, and I and say copy column. And then I might put them into a, let's say a Minovini report. So I can click on this column here and I can say insert copy column. And so now those columns have been put from that report to this report. EdgeRater does the tricky thing of matching up the symbols. So it's not just blindly copying from one row to the other where the rows have to match. It's going to look for the right symbols to make sure they're matched up. And now you have one report's information in another. And so that allows you to do see that information all together in one report and do sorting and filtering in a better way. Okay, so for instance, here you could say MCK, yes. You immediately see that it is a 3%, 7, and 3 on the seasonality. You could filter this to show just things that are meeting the Minovini criteria, and then you could filter by what actually has seasonality coming up, and then that would be LLY, the 9 and 1, 3%, and it meets all the Minovini criteria. So a real short list there of things that have seasonality and meet the Minovini criteria. So yeah, many ways to do it. Anyway, let's just check on one thing. Refresh this. Let's see, did anyone look at that? Wow, exciting. So that's cool, thanks. Thank you to everybody who has subscribed to the YouTube channel. Very good. Make sure when you subscribe also you turn on notifications, then anytime I put a video up, and this webinar will become a video, you'll be notified that a new video exists. So that's awesome, 1,000 subscribers. I hope they send me something in the mail. Okay, good questions. So I'll take questions now. So I think I'm done with what I wanted to show. And so yeah, feel free to type some questions. If you'd like the mic, or if you want to say something, just raise your hand and I can open the mic. But yeah, June 22, there was an update to some of the templates, the free parking template update and the MK signals and indicators update. Wasn't much change in the functionality there, but what happened was, I'll just bring up the MK mouse capture template. I changed the name of this, so it's a very small change, but then in the actual report, I changed, let me just run that on the CBOEs. You'll notice a lot of the newer reports have this area up here with the count of stocks and then how many are visible and what percentage of the count are visible. A lot of the older reports didn't have that. So as I get time, I'm going back and adding that into some of the older templates. That's what I did here. And that's a useful count, because if you do a filter here and say pocket pivots today, I just want to see yeses. And I can immediately see that there's 138 or 23% of stocks in this list of 593 had pocket pivots on Friday. So that was the change there, and pretty much that was a change in the free parking report as well. Although actually free parking there was actually an error I found in free parking too, which I fixed. So, but I don't believe anybody was using free parking. So I don't think that really affected many people. So, but that's all fixed, and it also has that extra bit of information in. Okay, yeah, Teresa, the %B buckets per symbol you'll find in Hot Topics. If you ever are wondering where a template is, by the way, I'll just show you. So here's Hot Topics, and %B buckets per symbol is here. If you ever want to know where a template is, click on the little search templates icon. What will happen there is, okay, that's great. Okay, when you click on that, it will bring a web page up for you, which is going to be, it will do it automatically. I'm just doing it manually here. The trading templates web page. And the trading templates web page has all of the templates and all of the categories listed. So if you wanted to search for %B buckets, you could potentially just type in buckets, and then you'll have %B bucket migration, %B buckets per symbol, or the %B buckets report. So that's a good way to find them. And then it's got the categories here too. So you can just look for the categories and it shows you all of the templates in each category. New template ideas. Yes, that's a great question. Of course, I'm working on new template ideas. Would you like to know what they are? I'm sure. Okay, so the first thing, and this has been something that's been requested quite a lot, is earnings. Earnings dates is what I'm thinking of. So if I look at, let's go down here, find my templates. Okay, so earnings dates. Yeah, so I've got a few things around earnings that I'm looking at. So currently in the system, there's no earnings information. Okay, so we need earnings data in order to see earnings information. Once you have earnings information, you can do some really cool charting, but also some very cool kind of quantitative analysis. So I wonder if I wonder if it's going to let me show this. I'm not sure these still work properly. Let me try it. Under the My Templates, that's where I do all of my kind of the work before it becomes something for real. It appears in here, and but oftentimes these templates are left in states where they're not really working, and I'm not closely keeping track of which ones were the final ones. I normally have to go to the file system to find those. But is this the one I wanted? Well, not really. It's okay. It's not really the way that I was going to show the data. But the idea was that it will show you how many trading days there are before earnings are due, what that date is, what the prior moves were from the earnings. So it's not actually, this isn't the final thing, but it's an idea. And then on the charts, it can actually have, and I might have it in one of my layouts. Let's see. I type in here, earnings. Yeah, okay. Earnings and IV30. So here we are. Here's ABBV. So you see on the chart, the red lines. These are this is the last trading day prior to earnings where the red line is. So that's a really useful thing to see. All right, so every bar that occurs after these red marks here is a earnings move. Now, of course, sometimes when you have earnings the day before, you have earnings after the market close, AMC, or sometimes you have before the market opens. So the idea with trading days before earnings, it shows you the last opportunity to trade prior to earnings. So it's not always the date of earnings. This bar is not always on the date of earnings. It's the trading day prior to earnings. If earnings were after the market close, then it would be so in this case, for instance, ABBV. It either had earnings on Thursday after the market closed. So the last trading day for earnings was Thursday. Yeah, or it had earnings on before the market opened. You see what I mean? It could either be before the market opens or after. If it's before the market opens, you want to have the mark the day prior. You want to have that mark the day prior because that marks the last chance. You can't trade the day of earnings. You can't trade. Obviously, you can trade the day of earnings, but you can't trade using pre-earnings information on the day of earnings if it's before the market opens. That sounded very confusing the way I said that. I don't know if that made sense, but that's the idea, is it's showing you the last possible trading date prior to earnings. Okay, so Teresa, there are some templates that do require a premium data subscription, and any template, the options data that's in the system, that is, there's an options database online, which is quite expensive to maintain. There is a subscription in order to use that. So if you have the EdgeRater premium data subscription, then you do have access to all of the options data and templates. And this is a good point to mention that there is currently, just as of today, started a July the 4th special offer. And this applies to anybody. If you have already got premium data, you've already resubscribed to premium data for a year, then you can still take this, and 16 months of premium data will be added to your subscription from when it ends. But the offer is, and this has not ever been offered before, you can re-up for premium data and get 16 months for the price of 12, so $297. Just go to edgeRater.com/promo/J422, and that will get you that offer. So that's going to end on July 4th. It started today, but there's also a really fantastic offer on the lifetime licenses to EdgeRater. Instead of $2,000, it's $1,000. Bear in mind, the lifetime license is the license to use the program. It includes a year of the premium data, but after that year of premium data has expired, then you will need to get premium data subscription if you wish to continue to have, say, the options data. So that is a fantastic offer, and that will expire July 4th. So yeah, so they are the July 4th offers. Okay, so that's new template ideas. Okay, so let's have a look at the questions here. Okay, so Ron Ross is saying that, is there a way to test a strategy to buy TQQQ when a Heikin-Ashi candle turns green with a MACD crossover and sell when there's a red Heikin-Ashi candle? Would you be able to backtest this with EdgeRater? The fact that you've talked about Heikin-Ashi makes that not quite as easy to write a script for, because the Heikin-Ashi candles are drawn actually in the rendering engine, and they're not actual bars that the scripting uses. So with that one, I would have to look in more detail about that. Do you have a way to determine which templates perform the best over the last week, month, or do you not track that info? I don't track that info. Is there a way to determine what performed best? Well, it's a really hard question, or it's a really hard thing to answer because some templates are really showing you potential candidates, and they might bring things to the top of the list. They're not necessarily saying buy this thing. They're saying these things are now in a interesting state. Now apply your trading information, your trading knowledge. Your good trading entry and exit risk reward levels. Apply those to the trade if you think it's, the templates, a lot of them just bring good stocks to the top of the list. They're not saying buy it now. So in that way, they're hard to say, oh, that's working well. You kind of bring your own trading, your own trading arsenal to those trades, essentially. Okay, Ron Ross, thank you. Good. Okay, is there anything I didn't cover somebody would like to know about, or any other questions? We have sort of gone past the hour. If not, I really thank you for joining me. I like to do these things, and actually having done the workshop last weekend, that was a great time to get back into doing it. You may have noticed that I've not done a lot of webinars recently, but now I'm going to get back into that, and so looking forward to doing it. Thanks, Ron. Yeah, let's talk soon. Thanks, Jim. Okay. Okay, Shashi says, TQQQ, if I would have sold weekly put with a strike, say 0.85 Friday's close, can I find what premium I would have got since inception of TQQQ? No, so that's, you're talking about an option strategy that runs every week potentially and accumulates over time. What I showed there was basically an options report where you can draw a line on a chart to show you the starting price of the options and the ending price of the options, but it's not using a back testing strategy over that period of time. Now there are things in the works to do with back testing and multi-factor trade analysis to do with options, but that's in the works. Not available at the moment. Raymond, yeah, I'll type the link in here in case anybody is interested. There we go. And let me know if you get that. Let me know if you've got that, and if not, send me an email and I will send you the link. Maybe you didn't get that. Hang on a second. Do it again. There we go. So I was looking for you have past weekly options data since what time? Oh, okay. Yes, there's past weekly options data since 2013. Beyond that date. So if you scroll back a chart, and you have some of the implied volatility numbers showing, then you will find a time where the implied volatility disappears. And the reason for that is we don't have options data beyond that date. So it's 2013 is the start of the options database. Also, the implied volatility numbers, IV30, are only on the weekly options, so the 600 options, not on every single optionable stock. We can take a look at, I think an obvious example here would be Microsoft. Yeah, and you can see Microsoft suddenly stops with implied volatility numbers off before 2013. But it's interesting to look at this now in context with this trading days before earnings, as you can see how the implied volatility, increases up to earnings and then suddenly comes back down again. And then sometimes it doesn't really increase, but often there'll be a big drop off. There was still a drop off here. There'll be a big drop off of implied volatility after earnings, which obviously makes a lot of sense. But I think adding that trading days prior to earnings is a big deal. It'd be super interesting. Okay. There's a Q&A. Can you quickly show, sorry, that came in the Q&A section and not in the chat question. Can you quickly show what's the best I'm not sure of that question, but it seems to be asking about ETF Pro versus EdgeRater. That's an interesting question. Obviously, I did mention that there's the ETF Trading Bandit is another program, and that is specifically about the high probability ETF trading strategies. However, there is a template in EdgeRater Pro as well. And if you look for the category called high probability ETF trading, which is, I think I added that to the top. There we go. High probability ETF trading. If you run the signals template on your list of high probability ETF trading book ETFs, and you'll end up with a report which is very similar to the report you get with high probability with the ETF Trading Bandit. So it's not specific. Obviously, this is done in the EdgeRater way, whereas ETF Trading Bandit is only to do with that strategy. So do you need both programs? I would say no. You don't need to have both programs. Some people like to have both programs because the ETF Trading Bandit is maybe easier to use if that's all you're doing, high probability trading. But here, if you wanted to trade high probability ETF trading strategies using the close price of the day, you would run this template at the end of the day. So you would first of all wait till about 5 minutes prior to the close. You'd hit this intraday update button here, which would grab the latest data from Thinkorswim. So you do have to have Thinkorswim, and then it would produce a report telling you what you should be doing with that trading that strategy. Tom would like a webinar to cover trade simulations. I would love to do that too. Yes, sounds good. Yeah, I'd like to know how many people would be interested in that. I'll send out a link, and we'll see if people get into that. Okay. You're welcome, Ed. Thank you. All right. Thanks for coming, everybody. Enjoy the rest of your weekend. And I'll look forward to seeing you all next time. We'll do these more frequently, for sure. Thanks, Paul. Great. Awesome. Okay. Thank you.